Very interesting. We're now having watched for most of last year, the Federal Reserve telling us that there would be no interest rate rise in 2021 or 2022. We got Atlanta Fed Chief Raphael Bostic now talking about a rate hike potentially as early as the middle of 2022. Why do you think we're getting this revision in plans?
There's the PCA deflator, which is a sort of proxy for inflation in the US that went out and shows that although there are some sectors which are negative, such as energy, leisure, etc., there are some sectors, and you were discussing before, which show signs of growing quite fast, typically household equipment. So in fact, there is a sort of double speed inflation, which some sectors which have been very depressed, but some sectors which are starting to grow. Second, there is a lot of savings in consumers' wealth management, and this saving could be spent if the situation goes better with the vaccine, because people will want to have a bit more leisure than what they had in the last year. So this mixture between some sectors which are doing quite well, some savings that can go back to the market, the fact that production could be disrupted if there is too much consumption arriving at the same moment, could mean that inflation goes up quite steeply once this vaccine starts kicking off in terms of result.
You make it sound, though, as though it could be a temporary phenomena, just about some supply chain issues. I mean, one of the big questions for me is how we can see a permanent shift to higher inflation expectations, given that the labour market slack is so great, both in North America and in Europe at the moment.
That's why for the moment we see it more as a temporary effect and not necessarily as a long-term macro risk. But the fact is that it could have influence on some asset class, typically equity, which are already very highly priced. It could have influence on sector rotation, where some sectors which will be more sensitive to inflation will do better, while others, such as tech, which are generally not very sensitive to inflation, do less well. So it could have, even though it's temporary, it could have some effect on long-term bond yield, obviously, and we've started to see that. It could have an impact on rotation into stocks, and perhaps the price of energy and gold that would go up